Hey, good morning, everybody. Today is Tuesday, July 21st, 2015. My name is Cliff Backus, and this is your daily video market review. Stocks closed mixed yesterday as the market was higher at the open, traded higher most of the day, and then swooned into the close. Trading volume was mostly lower. The Nasdaq did manage a new closing high yesterday, but the Russell 2000 closed lower, as did the S&P 400 and the S&P 600. Keeping with the nature of the market recently, the S&P 600 recorded a distribution day, while the IBD 8585 chalked up another accumulation session. Declining issues bettered advancers by 2-1 yesterday. The New York Stock Exchange advanced decline line, while looking a little healthier recently, continues to look more bearish than bullish. New lows bettered new highs by about 2-1 Monday. Our market timing model is showing a margin signal on both the Nasdaq and the S&P 500. A margin signal is our strongest buy signal and occurs when we have an aggressive buy signal combined with a buy signal. A margin signal indicates that aggressive traders can utilize margin to leverage their portfolios. More conservative traders should be working toward fully invested. The O'Neill market model is showing a confirmed uptrend in the market. Our distribution day count is reasonable for a confirmed uptrend. Large capitalization stocks outperformed small again yesterday and have the edge in a 10-day moving average basis. This is more consistent with a market in correction than with a confirmed uptrend. Our swing timing model is indicating a moderately overbought condition in the market. Although we're aggressively bullish at this juncture, we're getting mixed signals in the market. Caution's advised. Bulls should feel free to put cash to work, but be sure you have your stops in place and err on the side of caution. Okay. What we're looking at here is Moody's list of 177 industry groups sorted in HGSI, High Growth Stock Investors, by 5-day percentage price change. The reason that we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we're doing here, is that we need to identify where the power is and get out in front of it. So let's see where the strength in the market was yesterday. We can see yesterday that electric and gas marketing was up 8.6% on a 5-day basis. The biotech index is up 4.3%, as is the specialty pharmaceutical index. Healthcare supplies has been up 3.6% over the past 5 trading sessions, and cement and aggregates have been up 3.1%. Again, we're seeing a lot of strength in the biotech and specialty pharmaceuticals. We're seeing strength in the healthcare. Let's start today with a look at the Russell 2000. The Russell 2000 yesterday was down again. We closed near the low of the trading session. The Russell recently has found resistance at this trend line, and yesterday found support at its 50-day moving average. So right now, the battle between good and evil is between resistance at the trend line and support at the 50-day moving average. It would be very healthy for the market to take out this trend line and ultimately resistance up here in the 1296 area. It would be unhealthy for the market to take out support at its 50-day moving average and ultimately support down here in the 1226 range. See what the Nasdaq Composite's up to. Nasdaq yesterday was up 8.72 points, or 0.17%. Closed right about the middle of its daily trading range and closed at 52.18. Trading volume was below the prior day, but about average daily. For you followers of William O'Neill, we are on a confirmed uptrend in the market with 3 distribution days in the past month. 3 distribution days for this point in a confirmed uptrend is a very, very reasonable distribution count and would indicate that perhaps this market has a little bit higher to go. The NASDAQ last week took out resistance in the 51.64 area. Next area of resistance would be this trend line right here, and resistance down here at the 51.64 area would now become support. We are on a margin signal on the NASDAQ, which is our strongest buy signal. Margin signal means that aggressive traders can utilize margin to leverage their portfolios, and more conservative traders should be working toward fully invested. Let's take a look at the S&P 500. The S&P yesterday was up 1.64 points, or 0.08%. We closed at 21.28. Trading volume was very light yesterday, trading below the prior day and below average daily. The S&P is on a confirmed uptrend in the market. Yesterday we lost a distribution day, and our distribution count on the S&P 500 now stands at 4, which is very light distribution for this point in a confirmed uptrend. On Friday, the S&P managed to break above this downtrend line. So we're now on a neutral condition in the market. We have resistance up here in the 21.34 area. We have support down here in the 20.72 range. The S&P 500 is on a margin signal. Got a couple of stocks I want to take a look at today. We've been following Nexstar Broadcasting for about a month and a half now. Nexstar owns and operates 87 TV and 26 digital multicast stations in 21 states, serving 49 markets. The stock is in a first stage base. It gets a 68% checklist rating. Our pivot point for that base, that first stage base, is $60.21. Notice how Nexstar broke above this trend line, which for aggressive buyers would have been a good point to get into an early entry. Nexstar has had a lot of accumulation recently. These bars of heavy above average volume are accumulation. We have very little distribution over that same period. Nexstar, I think, can be bought by aggressive traders here in the anticipation of a breakout above this pivot point at 60.21. More conservative investors may want to wait for that breakout if we break above the 60.21 level on 140% of average daily volume. Next, I want to take a look at GoPro. GoPro has been in a downtrend for about 9 months now. Notice how we put in a low down here in March. We then increased at least 35% to a high in the 61.19 area. Zooming in a little bit, GoPro's putting in a first stage base with a pivot point of $61.19. GoPro gets an 80% checklist rating. We broke out of this 9-month-long downtrend on fairly heavy volume. We've seen a lot of accumulation in GoPro recently. All of these days of skyscraper volume in the past few months is a sign of institutional accumulation in the stock. GoPro can be bought on a break above the $61.19 area on at least 140% of average daily volume. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs, Incorporated believes to be accurate. Ohanneson Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.